going to do our testing internal controls now. Testing internal controls. Okay, and way back, remember I gave you the code AEIOU. Remember that way back? Well, A stands for analytical procedures, right? Analytical procedures, you can testing internal controls and actually going through ratios and that kind of stuff. So you don't use the A in AEIOU, but you use the rest of it. Okay, so E, just so you have it there with internal controls again. So we've got E, which stands for inquiry. With an E, okay, I know it should be maybe I in, but E, N, Q, U, I, R, Y. Okay, and this is a narrative note. Following interviews with relevant staff. And it's not a very strong source. Of audit evidence. Okay, I is inspecting. Okay, so we're inspecting documents. Prepared by the client. As evidence of performance of the internal controls. And when I give you these words, inquiry, inspecting, it just, the examiner doesn't like you using, do you know, if you're testing a control, using the words check all the time, check this, check that. So if you use nice words, make an inquiry and inspecting a document instead of checking a document, use it like inspecting a document. A-E-I-O. Is for observe. Okay, so we're going to observe the internal control being performed. Okay, and what we do, we would test. We could actually sit down and actually watch the actual person putting the information into the computer, or we could test the control by doing a dummy run. And see will the control work. By picking up the information correctly. And that would be like if you have someone which say inside in your purchase you've got a credit limit and you're trying to issue an invoice outside the credit limit. Do you know what I mean? That somebody could actually put in. That's A-E-I. No, it's A you will be using for this one. E-I-O and U.
Use fairly
Sorry?
Use kind of not really use it.
No, it's recalculation. That's the one you'll remember then. because it's different.
Is that the rechecking?
Rechecking, yeah. And that's more like going over to substantive stuff as well, but you could use it in there as well. So I think using these words instead of using the word check this, check that, check the other thing.
So you're checking wages against the hours worked and stuff?
Yeah. Okay, so that's our internal controls, testing our internal controls, and then our last thing is documentation of internal controls. Sorry, do you have all that? I just moved on. I forget. Yeah, you have all that, yeah? Documenting internal controls. So when we're documenting, so like we're the audit now, right? And we must find out how their internal controls actually work, and we have to document them, then how those internal controls actually work. Okay, so we have narrative notes, flowcharts.
Is that what you're reaching them now?
No, I'm just giving, yeah. Okay, so narrative notes. Narrative notes, and we can look at the copies of the manual instructions used by the client staff. Okay, we can use flowcharts. And we can use internal control questionnaires, which are known as ICQs. Okay, and I just need you to go to your handout then. It's this handout, the one that has got ISA 315 written on top of it. And we'll way back to part C of that, documentation of internal controls. There's part C and documentation of internal controls written on it. This one here is got it's ISA 315. And to go back to part C of that. It was a handout I gave out a couple before. Okay, and this just goes through this in more detail. Okay, now just see there at the bottom of the page you've got narrative notes. Okay, and the top page you've got flowcharts, and on the next page you've got internal control questionnaires as well. So narrative notes, they're obviously, do you know what I mean, notes that the auditor is going to make on them and type them up on the computer or something. Okay, there's nothing major in that. Flowchart, go to the top of the next page. Flowchart, the diagrammatic representation of the flow of documents and records through a system and designed to show the sequence in which operations or events take place. Okay, so we all know what a flowchart is, don't we? Just to know the advantage of the flowchart are, it is easier to track a system than to write a narrative description. Weaknesses in the internal control system should be apparent. It facilitates audit staff training as will help new audit staff to understand systems to be audited. and documents or operations which serve no useful purpose are more easily detected. Then a disadvantage of flowcharts are the flowchart may not be updated when changes are made in the system. In practice, the client's employees may be operating the system by taking shortcuts, and the flowchart may not indicate this. Okay, just to know what the flowchart is, the advantages and the disadvantages of it. Within the internal control questionnaire, this comes up in the exams as well sometimes. Although there are several different forms of ICQs in practice, the basic principles are ICQ comprises a list of questions that determine whether controls exist within a system. The questions require a yes or no answer, and no answer will indicate a weakness in the system of control. Now that not applicable may be used if the question is not applicable. Separate ICQs are drawn to record and evaluate individual systems, payroll system, purchase system, sales system, all are different systems. Internal control questionnaire serves two purposes. They are both to use both one to record and two to evaluate the systems of internal controls. The ICQ should be completed after observation and verbal questioning of the client staff. Care must be taken when completing the ICQ that client staff do not give the replies that they believe the auditor wants to hear, but say what actually happens in practice. So example, the following is a typical example of the layout and style of questioning found as part of an ICQ. And this covers the purchasing system. So if you look at the next page, it just gives you a little breakdown of what we're looking at. Okay? See down the middle of it, our official orders issued showing suppliers' names, quantities, orders, and prices. So you've got yes or no, not applicable, so you put in yes. Who authorises orders and what are their order authority limits? See schedule number 22. Should have a different schedule to actually write up all that inside. So just to know, to give a look at what a typical ICQ might look like. Okay, then we've got walkthrough testing. This involves testing the system as recorded from the ICQ or flowcharts and narrative notes. The objective is to confirm that the system recorded is the one actually operating in practice. This is achieved by means of a walkthrough test in which the auditor will trace a few transactions from their initiation to their conclusion following the system as recorded. As a result of the walkthrough test, amendments may be made to the recorded systems to ensure that it accurately reflects the one in operation. The auditor must not proceed to evaluate a system which is incorrectly recorded, otherwise incorrections conclusions may be drawn. And on the next page then, you've got an internal control evaluation. So having completed an ICQ and walkthrough test, the auditor will evaluate the strength of the internal control system by using key internal control questions. And this reason he's evaluating now is see, can he use them as audit evidence, or will he have to go through a full substantive test? We will look at a very important audit technique, internal control evaluations. However, the exercise of audit judgment is also initially important in the evaluation of the controls. So what they're saying is that the auditor needs to use his own professional judgment to know whether these internal controls are strong enough to be used as a source of audit evidence. So internal control evaluation forms, the need for them. No distinction is made within the ICQ itself as to the relative importance or materiality of the questions asked. An overall evaluation of each area does have to be made after the ICQ is completed and the walkthrough tests are carried out. It's difficult, however, to assess in retrospect whether a no answer in a particular instance implies whether a weakness may be easily compensated for, could have serious repercussions, or would have to be remedied immediately to avoid disastrous consequences. But we hope we won't have to avoid disastrous consequences. For this reason, most audit firms use forms which are more specialised than ICQs and which assist overall evaluation as well as reflect the materiality of the weaknesses identified, and these are internal control evaluation forms. So if you want to put in here, see on our notes up on the board here, if you want to have internal control questionnaires or ICQs, if you want to bring that down further then, if you want to put a little arrow down, we do our walkthrough test. Okay, and then we're looking at our internal control evaluation forms. Okay, which are ICEs. ICE. ICE. Okay, so principles of our ICEs. An ICE isolates the main control objectives within a system and asks key control questions. The auditor is required to apply his audit judgment to decide whether any weaknesses identified might be material. With any system, there are varying degrees of risk. Controls are established to prevent adverse effects of these risks. The objectives of key controls are to prevent or minimise the more significant of material risks within the system. The cost of controls must be balanced against the assessed cost of the risk, and if felt, the resource will be directed towards controlling those areas of significant risk. So just if one long journey to illustrate the link between risk and associated controls, here are some examples of high risk and associated controls within a purchasing system. So absence of value analysis, quality control, and purchase leading to poor value for money. So your control tests for correct quantity and quality undertaken at goods receiving point. Purchases could be obtained by unauthorised persons or by authorised persons for private use. So we need serially numbered order forms kept securely by nominated individual, and an authorisation system for purchases orders. Purchase contracts awarded to companies paying bribes to buyers. Requirement for formal tenders for purchases over a certain amount. And there should be controls in place for all these to be effective. So just on the next page, it gives you a little sample of your specimen ICE form. So your control question is, can liability be set up for goods which are either not authorised or not received? So your control checklist is separation of duty, issue and authorisation of purchase orders, proper receipts and inspection of goods, and issue of sequentially numbered goods received notes, and procedures for dealing with damaged goods. Okay, your answer to your control. Okay, tick when checked, answer to your control. Might weaknesses be material? And then your ICQ ref. And you see on top, you have your internal control questionnaire. Your section is purchases and trade creditors. Your date was performed at, and then the initials. The initials of the person who actually did this review of them, and then you actually have another initials underneath of the person who reviewed the work that you actually did. So on every auditing working paper, you actually have two sets of initials: the person preparing it, and the person actually reviewing what the person prepared.
Would that be like your boss, or would it be just two people the same, one person?
Oh no, it's to be someone over you.
The
To be the boss over you. Yeah. So like I prepare him at work, and then my boss was, initial his off as well. But really, you actually put them into the computer, and you've all the initials done across the board, Yeah. Okay, so just to know, there are different ones to actually look out for.
Where's the control for that?
Okay, then if you go to the very last page there, distinction between ICQs and ICEs. ICQs are used both to record and evaluate the system of internal control, and ICEs are used primarily to evaluate internal controls. Okay, so your ICQ records and evaluates, but your ICE evaluates the internal control. The ICQ incorporates a large number of detailed questions with not attempt to distinguish their materiality. The ICE isolates the main control objectives within the area under review and asks a key control question. The answer no in an ICQ indicates a weakness, but the significance of the weakness is not revealed in the form itself. So all you say is that there's a weakness there, but you don't say how you actually would correct it. So column 5 in a specimen ICE, however, requires audit personnel to state whether the weaknesses might be material. Weaknesses are highlighted by the answer yes on the ICE compared to no on the ICQ. Then evaluating our internal controls. The auditor will use internal control sheets in conjunction with the ICQs or flowcharts. A key control question is posed and its answer will usually lie on the ICQ or flowchart already prepared. The key question summarises smaller control features in one major question. In an ICQ, there will be both positive and negative replies. The auditor must decide whether the negative replies are a material source of weakness which will preclude him from giving a positive reply to the key control question. If the weaknesses are not material, a positive reply to the key control question can be given. ICEs have the advantage of forcing the auditor to focus attention on key questions. He is thus likely to be distracted by less significant ones. You can also see how their use is linked to ICQs and flowcharts. The auditor will then review the effectiveness of internal controls within the system as a whole. Consideration of compensation controls will be relevant. So some important points here to consider are division and clear definition of staff duties, responsibility and authority, authorisation procedures, extent and efficiency of internal audit and the experience and qualifications of the internal auditor, adequacy of supervision of client staff, competence of staff, and custody and handling arrangements, particularly in relation to high-risk assets of cash. So it's all about documenting our internal controls to see can we use their internal control system. And even if you say you can use their internal control system, say that they have very good internal controls, you'll still do some substantive testing. You won't just use all of them, just use a lower portion of substantive and a higher portion of control, their internal controls. And then if their controls are weak, you do way more substantive and less internal controls. Okay, I just have a little, this is an actual internal control systems, just like from a one you'd actually use at work. Because you can actually see what's just on. I'm not going to go through it here now tonight, but it's actually a real internal control. And it just lists on page 4 and 5 all the different items. You actually have to go through and test all those controls and actually document them all. But they have computer systems now that actually do all that for you. You can actually come along with your USB stick and stick it in, and you'll be able to go through test controls a lot easier. You couldn't just spend time doing all that manually. Okay, so that's our internal controls. Okay, so just I want to look at our substantive procedures now. Okay, substantive procedures. Okay, and substantive procedure actually, there's only two types, so it's actually very easy to do them. So we've got one, analytical procedures. Okay, and we're looking at trends, ratios, comparisons with the previous year. Okay, so that's our first one, analytical procedures. And like when I talk about ratios, trade, when I talk about like or looking at gross margins, all that kind of stuff inside there to see how they're looking as compared to the year before. Okay, test the details. And our second one. Okay, and we're actually looking at the details themselves. So we're looking at invoices. Look at non-current assets for existence. Okay, so it's all about details inside here. Invoices. Okay, so that's the two ones we're looking at. We've got our analyticals, we're looking at our ratios, our trends, our comparatives from the year before, and our test details, we're actually looking at the details themselves.
That's what she was saying before, but actually going to their yard or something and looking at.
And physically looking at their vehicles, yeah. Then for existence, ownership then, we look for the copy of the tax book to make sure it's actually registered in their name and stuff. Okay? And that leads me in then to doing this. We look at the auditing assertions. This one, where's my auditing assertions? These ones. Okay, and these are very important. And we're doing these questions from now on. You're trying to link your answer into the auditing assertions. I was saying I have an anagram of how to remember your assertions. So it's going to give you the anagram here. Okay, and it's crop move. Okay, so we've got completeness. Completeness, rights and obligations. Occurrence. Presentation and disclosure. Okay, so completeness, rights and obligations, occurrence, presentation and disclosure, measurement, ownership, valuation, and existence. So crop move. Hopefully it'll help you to remember the words down and down. Instead of just reading them off the page there. Okay, and there are certain ones in that apply to your P&L account, and there are certain ones that will apply to your balance sheet. Okay, so I'm going to give you a list of each of them. Just so when you're actually inside the question, you're looking at wages. Okay, so you're looking at sales, right? Or you're looking at receivables. Your receivables are inside in your balance sheet, but your sales are actually inside in your P&L account. And which assertion you'd be looking to match up with each of them. Okay, so we've got transactions. So revenues and expenses, which would be in our P&L account. Okay, so we're looking at completeness, accuracy, occurrence, where the sale actually happened, okay, so for completeness, you can put in all the sales are included. Accuracy, are euro amounts right? And occurrence, the sale actually happened. Okay, classification and cut-off. Okay, they're the important items inside our, when we're looking at revenue and expenses. Okay, then for our balance sheet items, what are assets and liabilities? Okay, again, we're looking at completeness. Are they all recorded? Valuation, existence, rights and obligations. What we mean by rights and obligations is, do you actually own the asset and have you a right to that asset? Okay, and then presentation and disclosure applies to them all. Okay, are they actually presented in the right parts, and the disclosure is in the right part of either the balance sheet or the profit and loss account? And let's come together now, we're doing a question in a minute. Okay, and just put one last thing, I gave this note before, but just to keep it in with this lot of notes, your internal controls, versus substantive testing. Okay, I gave it to you way back, but if you want, you can just do it there again, just to get the minds working on it again. Okay, so just a short note about your tested controls. So you're testing your controls, identifying an internal control that the company has in operation, and you have to test it by checking that it is working properly. Okay, and you can do this by reperforming it, by observing it, by inspecting it. That's part of our AEIO and U. You can put a recalculating in there if you wanted to, observing, inspecting. Whereas with a substantive test, you're going to do your analytical procedures.
So was that by reperforming?
Reperforming it, sorry. It. You won't reperform inside there.
By
Observing it. She's sorry. And by inspecting it, the last is right. Yeah, by observing it. I just want to give you a sample here. So you've got in the middle of your page, you're going to have completeness of payables. Okay, so you're taking control.
the whole page for that?
No, just, well, it's probably more than that, alright, yeah. So we're going to check the completeness of payables here in the middle, and then on one side we're going to have our test and control, and the other side we're going to have our substantive tests we do. Okay, so our test to control. Okay, we're going to inspect a sample. Okay, it's always a sample, it's not the whole lot. Of supplier statement, reconciliations, or creditor reconciliations, if you want to put in here. That they have been reviewed by an appropriate level of management. So when you were going through your controls at the start, you saw that there should be a control in place where when the credit control was done at the end of every month, whoever did it, and there was actually some person in the management was supposed to sign off on them that they were okay. So you're going back now and seeing that control there to see has that actually happened. Whereas our substantive procedure is, we're going to inspect the cash book, payments, in the post year-end period for any significant payments to suppliers So we're inspect the cash flow payments in the post-year-end period for any significant payment to suppliers to ensure the year-end liability is accurately recorded. Okay, so to look at your difference, your control, you're only looking for a signature, you're not actually looking at any of the figures, whereas your substantive, you're actually looking at the figures inside there after the year-end, or at any time you're looking at the figures. Okay, that make the internal controls clearer from the substantive testing. With the internal controls, the company itself would set them up, and you're assessing their internal controls, see how they're working. And we do it, we look at the control, we test the controls, we document the controls. Whereas the substantive procedures, we're actually going in, looking at the analytical stuff, looking at the ratios, the trends, all this kind of comparatives from the year before, and then we're actually going in and looking at the details of all the figures themselves as well. Okay, and these all tie back into our assertions. If you can remember the assertions and remember the AEIOU, hopefully it would help in using the bigger words inside when we're answering the questions. So I've got a question now here, okay, where we're going to look at, it asks us for the internal controls, it asks us for substantive tests, for I think receivables and for sales and for revenue. Okay, so we're going to look at that. And just a tip I found here, just that actually it makes sense. Okay, when you're looking at the controls, okay, and so that don't just say check this, check that. Look at EIO and U. Okay, you're requiring your inspection, your observation, your recalculation. Then give a specific control and then try tying that into one of the orders and assertions as well. Okay? Which we're going to be doing in a minute. So you have the question there, it's called Tinkerbell. Okay, so Tinkerbell. All I'm going to do is actually we're going to read down through it. I'm going to give you a few minutes to actually think about what internal controls are there, and I'm going to give you a sample answer. So you'll have an answer you can actually go back to rise over receivables and stuff like that. Okay, so this is. Okay, so I read down through it. Okay, so we're doing these questions first. Okay, or doing the exam style question. Read what your requirements are first, so you know when you go along to look at them. So this is actually for 30 marks now. So your question is going to be for 20 marks. So I think it's a good question to actually get the difference between your internal controls and your substantive testing looked at. Okay, so recommend 6 tests to control the auditor would normally carry out on the sales system of Tinkerbell. Okay, so 6 tests to controls on the sales system. And explain the objective for each test. Okay, and when we're answering that, we do, so there's 12 marks they going for that. We do it down in a column. Yeah, just show you here what we'll be doing. Okay, so we're going to have our control. Okay, and on the side we're going to have an objective. Okay, and we're going to list them down along number 1, 2, 3, 4, 5, 6. And so there's 6 marks, or there's 12 marks going for it. Probably going to split between 1 mark for the control and 1 mark for the objective. Let's make that a little bit bigger. Okay, so So Tinkerbell Toys Limited is a manufacturer of children's building block toys. They've been trading for over 35 years, and they sell to a wide variety of customers, including large and small toy retailers across the country. The company's year end is 31st of May 2011. The company has a large manufacturing plant, 4 large warehouses and a head office. Upon manufacture, the toys are stored in one of the warehouses until they are dispatched to customers. The company does not have an internal audit department. Okay, so sales, ordering, goods dispatched and invoicing. So we're asked for the sales system. So in these 3 paragraphs now, we're going to find our internal controls. So each customer has a unique customer account number, and this is used to enter sales orders when they are received in writing from customers. The orders are entered by an order clerk, and the system automatically checks that the goods are available and that the order will not take the customer over the credit limit. For new customers, a sales manager completes a credit application. This is checked through the credit agency and a credit limit entered into the system by the credit controller. The company has a price list which is updated twice a year. Larger customers are entitled to a discount, and this is agreed by the sales director and set up within the customer's master file. Once the order is entered, an acceptance is automatically sent to the customer by mail, email confirming the goods ordered and a likely dispatch date. The order is then sorted by address of customer. The warehouse closest to the customer receives the order electronically, and a dispatch list and sequentially numbered goods dispatch notes are automatically generated. The warehouse team pack the goods from the dispatch list, and before they are sent out, a second member of the team double checks the dispatch list to the goods delivery note, which accompanies the goods. Once dispatched, a copy of the GDN is sent to the accounts team at head office, and a sequentially numbered sales invoice is raised and checked to the GNN. Periodically, a computer sequence check is performed for any missing sales invoice numbers. Okay? So those 3 paragraphs will give us our 6 testing controls the order would normally carry out on the sales system of Tinkerbell, and explain the objective now for each test. Okay, so first we must find out what are the internal controls we'll be testing. So in the first paragraph, if you look at there, what internal controls have we got inside there?
Credit check.
Credit check, yeah. For our credit application, and we've got a credit limit.
Customer's account number.
Yeah, a unique customer account number.
To see if the goods are actually available.
To see if the
Goods are available.
yeah, that's another check in there.
They could do with somebody checking the system, they're allowing the system to
Automatically. Yeah, you just have someone that would actually check that, not just the computer doing it all the time. So that's a weakness in their system.
Should I trust the computer?
I just know. Computer error. See the discounts, we might have, that the large customer type discount, and this is agreed by the sales director. So they have a control there that the sales director does the discounts. In the second paragraph, so you have 4, say there, you've got the unique account number, the credit application, the credit limit, and the type of discount, and you've got the system automatically checking that the goods are available. That's another control they have in place. Okay, in our next paragraph, there's one there, where there's 3 of them.
The address is closest warehouse.
Yeah, check is there. The GDNs, yeah, the goods dispatch notes, and they're sequentially numbered goods dispatch notes. And if the last paragraph, we've got sequentially numbered sales invoices as well. And then we've got the computer doing a computer sequence check to see any missing sales invoice numbers. That's a check they have in place to see if there are any invoice numbers gone askew along the way. Okay, so there are tested controls. There are tested controls. Okay, I'm going to explain the objective for each give you these down along, okay? Okay, so we've got our test to control. Okay, so we've gone through there what our controls are, and now we're going to decide how we're going to test those controls. Okay, I have 9 of them here for you. Okay, so number 1. The order should attempt to enter an order for a fictitious customer. Customer account number. Okay, the system should not accept this. This order. Okay, so the order should attempt to enter an order for a fictitious customer account. And the system should not accept this order. And what do you think the objective of that test to control would be? Ensure that only customers you actually have on the system are actually ordering. So to ensure that orders is that still big enough? Or too small? Is it? Can you still see? Yeah. The orders are only accepted and processed for valid customers. Okay, so your control was that each customer has a unique account number. Okay, we're testing the control by inserting a fictitious customer account number, and the objective is to ensure that orders are only accepted and processed for valid customers. Okay, so you have to identify the control, test the control, and the objective of your control. Okay? Okay, number 2. With the client's permission. Okay, and I'm looking at this control, if you want to write down on the side, the control I'm looking at now is the credit limit. Okay, so this top one was the unique code for the customer. This one is to do with the credit limit. Okay, it's the control I'm looking at. Okay, with the client's permission, attempt to enter a sales order which will take a customer over the agreed credit limit, and the system should reject the order. Okay, so our control is that we have a credit limit in place for each customer. Our test is to put in someone putting them over their credit limit. And what's the objective of that test?
Which you're going to oversell it.
Yeah, that they don't sell them to people who are, do you know what I mean, that are already on the verge of their credit limit. Okay, so to ensure the goods are not supplied to poor credit risks. So our control was the credit limit. We put in a dummy one, okay, to see would it go over the sales order, would the sales order go through and up over the credit limit, and to ensure that they're not giving out to poor credit people, or we actually put in that they don't go over their credit limit, that customer doesn't go over their credit limit. Does that make sense? Yeah? Okay, our third one that we're looking at is the credit application. And that was in the first paragraph there. Okay, for new customers, the sales manager completes a credit application that is checked through a credit agency. Okay, so they have a credit application for their new customers, and it goes through a credit agency as well. Okay, so we're going to test that control by inspecting. This is our AEIOU now. See, we're inspecting a sample. Okay, and you always use a sample. Okay, inspect a sample. You don't inspect obviously the whole lot. You're inspecting a sample. And further on down the line, you'll be learning how you actually pick the sample. Okay, so inspect the sample of processed credit application forms. From the credit agency. And follow through the credit limit agreed to the sales system.
Well, let's check, like if somebody's been given rid of 30 grand, we haven't put in 40 or something, is it? On the system.
Yeah, and the proper, as you said, like the proper credit limit is put in for them. Okay, to ensure correct credit limits for each customer. And to ensure are only supplied to customers with good credit rating. Does that make sense, yeah? Okay, so the next one I'm going to look at is again, it's in paragraph 1, and has a company has a price list which is updated twice a year. Okay, so we have a price list in place. Okay, so that means all the invoices should be at the correct price, and it's updated twice a year to make sure that when you do the changeover in price, that the invoices actually flow through, that the price changed on the price list and actually changed on the invoices too. So we're looking at the price listing here. number 4, our price list. Okay, so we're going to obtain a copy of the current price list and agree for a sample of invoices that relevant current prices have been used. Okay, the current, I should make it say there, the current price list. Okay, and it might even be the current prices. Do you know what I mean? You might have to go back and get the prices at the end of the year. Do you know what I mean? I might get the price list in the middle of the year. Do you know what I mean? The first price list, it changed during the year, and a new price list just to make sure. It depends on when they actually change them.
Compared to the relevant invoice.
Compared to the relevant invoice. So if you got the price list, say, between January and June, and you pick a sample of invoices between January and June to make sure that they had been priced at the right amount. It sounds easy to say it, I mean, but it's actually to word it and put it down, do you know what I mean, the correct way for the answer.
The best way to do that would be to get an invoice for immediately after the change.
Yeah, to
So
see
change quickly.
did it actually change, like the following day, has it been updated? Yeah. And then you go to the post year end then as well and check it in January to make sure that if the price has been up in at the start of January, they have actually changed as well. Okay, so this is to ensure that goods are only sold at authorized prices. Okay, the next one we're going to look at is to do with discount. So larger customers are entitled to a discount. Okay, so our larger customers are entitled to a discount. So what we'll be testing to make sure that it is the larger ones are actually getting a discount.
What defines larger?
Just say that's
Well, it doesn't tell us what larger are. So I suppose like if it depends, it doesn't mean like on the volume public you're actually buying public. Maybe your 5 largest customers, yeah, get a discount. Higher discount maybe then. Maybe everyone gets a discount. So it doesn't say that, it says only the larger one, doesn't it?
Yeah.
Larger customers are entitled to a discount.
Question really, sure.
Sorry?
Doesn't really give you enough to question.
No, which ones? All I'm looking at is the larger customers. So you must look at your larger customers on your system then.
What they think is their larger.
Is there larger customers, yeah.
check this one, read, check that's been charged or been given.
Yeah, you check.
This one because we set a record and check that it's the same as on the invoice.
That's it, yeah, definitely, yeah. Okay, so our test to control, there's actually 2 of them that we actually have here inside for this. So confirm, discounts applied to invoices agreed to the customer master file. Okay, that's to confirm that discount applied to invoices agreed to the customer's master file. So I say like the larger guy is the guy getting the discount. And the second one, a ticked process, an order with a sales discount or customer not normally entitled to discounts to assess the application control. So you're saying one of your smaller customers, you put in a discount for him, and to see if the computer will pick up that he's actually one of your smaller customers and he's not entitled to a discount. Okay, and our objective is to ensure that sales discounts are only provided to valid customers.
Provided to valid customers.
Yeah, provided to valid customers. Number 6. Okay, and number 6 I'm looking at here is that an acceptance is automatically, okay, so when the order is entered, an acceptance is automatically sent to the customer by email confirming the goods ordered. Okay, so that's the control that's in place, that an email is automatically sent confirming the goods ordered. Okay, that's the control we're looking at. Okay, and the text we will have on that. Inspect a sample of orders to confirm that an order acceptance by email or letter has been generated. Okay, that's to inspect it. Okay, and then we can also observe the sales order clerk processing orders and assess whether the order acceptance is automatically generated. Okay, so we're inspecting a sample of them, and then we can also observe the sales order. Okay, we can do two things there. And obviously, if this was an exam question, you'd use either or. You don't have to mention both of them. Maybe you could use this one instead of doing all the inspecting, do a little bit of observing as well. Okay, and our objective is to ensure that all orders are recorded completely and accurately. See more.
Would you put in there something about the fact that we have to check the stock as well, so to make sure that the system, like you could actually put that in there about if it hasn't been in stock, if they've sent an email to accept the order before they've checked.
They don't say they have that in place.
The other thing is that there's the email, they send it to the closest warehouse. My experience, the closest warehouse doesn't necessarily have the stock you prefer.
Yeah, so that means then like that if is there a control there that if that warehouse is closed, it just goes to the next one. So that could be a weakness. I mean, that could be a weakness in the system that you could actually say if you were asked for weaknesses. Yeah. Like, and it doesn't say that it automatically does that. So like, they're thinking of weaknesses then in the system. I mean, if you were to advise them where they could, do you know what I mean, put better controls in place. Okay, our next one, is about this one. But the warehouse closest to your customer receives the electronically and dispatches. The warehouse team packs the goods from the dispatches, and before they are sent out, a second member of the team double checks. Okay, so the control is here is that you've got the warehouse team packing them, okay, and then you have a second team member double checking the dispatch list to the goods delivery note. Okay, so you should have someone doing the order, doing it up, and someone else actually checking the order. Okay, and this is actually doing an observation one now again. Okay, so this is number 7. Okay, visit the warehouse, or visit our warehouse, and observe the goods dispatch process. Okay, so we're going to visit a warehouse, observe the goods dispatch process to assess whether all goods are double checked, against the GDNs, the goods delivery, the goods dispatch notes. Okay, so this is the warehouse, and observe the goods dispatch process to assess whether all goods are double checked against the GDN and dispatched just prior to sending it out. You can probably get your hands on the GDNs too and make sure that one person has them marked as being order prepared and the other one marked as checked before they leave out, initial or something, yeah, before they leave the warehouse. If you couldn't actually physically get to the warehouse.
Like how many days, like for these kind of things, to do all that, like who do all that in one day?
Well, see, they usually have kind of a 60-day time limit that we would have all this done.
So like an auditor would go up there one day and he'd book a couple of weeks later he'd go to the warehouse.
Oh, well, it'll all be done like within, you'd have a team, I mean, that would go out and do this, you know.
It would all be done in one day, like.
Oh, probably, in this part anyway. Oh, well, all this, I could maybe spend a couple of weeks there.
Yeah.
Oh,
So you're saying like a team goes out, does it make more sense that one person does the whole lot so that they can see a whole picture?
Yeah, well, you see, you wouldn't have you'd have seen your guy back in the office, and you'd be sending out all the little trainees out to do all this work.
You know, this training per company kind of like.
Oh, you could have a couple going out.
Yeah.
Yeah.
On the meetings
Yeah.
and stuff like that.
But then they'd come back then and they'd say, well, I saw this.
The one they wouldn't say they document it. It's all about documentation. Yeah, they wouldn't actually go back and say tell the guy to be done through the computer and on the system, and he'd be looking through it then to see what's actually done. Yeah, and like when we're doing the stock now, the engineer, if someone from the order team going out maybe at the year end and actually physically watch the people doing the stock.
So somebody might see something down here at point number 7, but it mightn't be too bad. But then at point number 5 or 6 or something, they could be see something else and they might think it's too bad, but all together then the lad at the top is saying,
Yeah, it could.
all they need is strengthening.
Yeah, that's it. Yeah. And actually, a good video when we're doing the closing stock, actually a team going out doing the the closing stock count, it actually goes through, it stops and says what should be done here, has it done the stock right. It's actually, instead of me rabbiting on for a quarter of an hour, it's actually very good to actually get into your head what you should be doing. Okay, so our objective of that one is to ensure that goods are dispatched correctly to customers. Okay, to ensure that all orders, sorry, that all goods are dispatched correctly to customers. And they've done good that they are an adequate quality. Okay, to ensure all goods are dispatched correctly to customers and that they are of an adequate quality. Okay, it doesn't actually say that the guy is supposed to check the quality of the goods. No, he's supposed to check the amount. It says here.
I suppose if you're checking them, you're checking them anyway. If you're
Yeah.
off the box to check the
Yeah.
shelves.
Yeah, the cabinets washed in there. That there's something is actually broken when it's going out.
You're very good at that.
Do people do it automatically?
I do know that it comes off the truck, if it's cracked, it goes back in the truck again.
Yeah, I think it depends on who's actually doing it. Do you know what I mean?
Yeah,
Someone
we get
who
different deliveries.
could be very careful with their job done,
Yeah.
with other people didn't go, that's grand. Do you know what I
You
mean?
know the guy's coming in the truck, and if one guy comes, you know, like just to kind of have more of a check on it. If another guy comes, you know what way they are.
Yeah.
Shouldn't have to do that as a customer, should we?
No, but as a manager, I know there's some other types of customers when they've been broken and stuff.
Okay, the next I'm looking at, I've only got two left now to do. Okay, it's the control in the last paragraph there. A copy of the GDN is sent to the accounts department at head office, and a sequentially numbered sales invoice is raised. So the goods delivery, the goods delivery note, okay, is sent to the head office, and they issue an invoice. So we're going to test that control. Okay, so we're going to inspect the sample of GDNs. And agree that a valid sales invoice has been correctly raised. Okay, inspect the sample of GTNs and agree that a valid sales invoice has been raised. On that picture, when the goods have gone out,
So the goods are charged as well?
yeah, that there's actually an invoice after being raised for that GDN.
Should you check as well with actually sequential?
Oh yeah, then there should be a sequential invoice there. Yeah, it tells us that there was a sequential invoice.
Yeah, but should you check that? Inspect that and agree that the sales invoice has been correctly raised.
Yeah, we put down that a valid, or that we another test when you the date is in, and then that's check that the GDN is doing a sales invoice, and that could be another test in that all your invoices are in sequential order.
Or you would just throw all in as one.
What if you're looking for 6 of them and you're stuck? Do you know what I mean? Do you know, make 2 out of it. Okay, to ensure that all goods, not the all. Okay, that all goods are correctly invoiced. And this is the last one then with about the sequential invoices. Okay, so number 9 is about that our sales invoice are in sequential order. Okay, so review the last system generated sequence check of sales invoices to identify any omissions. Okay, and that's to ensure completeness of income for goods dispatched. And that should be reviewed inside there, sorry. Just my typing.
So you're actually checking that their sequence and also that the check is actually being carried out.
It's like in the computer, like there's none actually left out.
Yeah, but
Yeah.
actually also actually done the check.
Yeah, that's
You're-
it.
You're checking the computer system.
Yeah. So there's actually a lot involved in that, isn't there? Like finding the control, testing the control, and then your objective of control. So and that's for just sales. I mean, if that was not a question, you'd have everything actually there already. Like there's only so many times they can actually ask that.
That's not too bad then, if there's 9 things there, then you're looking for 6. Then.
Yeah, so you give 6, yeah. And that's like, this is actually the exam answer, so you wouldn't have to have, do you mean, exactly the same writing as that. Oh yeah, that's because the examiner can just go, oh yeah, that's the test, that's the objective, that's the test, that's the objective. Make it easier for them to actually correct it, instead of, having a whole page down of stuff. Yeah, and all the writing, trying to look for it. Okay, do you want to take 5? I realize it's nearly 8:30, is it? Do you want to take a break for 5 minutes there? For your substantive ones. You just press this here, is it?